Welcome to the latest episode of Dorsum Expert Talk, where we unpack all topics related to the future of financial services and technology. I'm your host, Botond Bátorfi, and today we are going to unpack a specifically interesting topic that we would have liked to talk about for a long time now: digital assets, blockchain, tokenization, topics that have been considered part of the niche for a long time, but now increasingly are a part of the financial mainstream of the financial ecosystem. And I have the perfect guest to unpack this topic today. With me is Péter Kanti, who is Dorsum's head of blockchain and digital assets. Patty, it's very good to have you here in the studio. Thanks for accepting our invitation.
Great, it's good to be here.
First question, just so that everyone gets a soft landing here, even the beginners to this topic, could you briefly define digital assets for those who may not know what they are?
Yeah, so digital assets are tokens which represent the rights for something, and they are registered usually on blockchain or distributed ledger technologies. And sometimes So this is a very new kind of framing for digital assets, because we can use them in other areas. For example, for other digital assets, like people can play in games. But nowadays, the standard definition is more likely this, which I just mentioned.
My impression, and you will correct me if I'm wrong, is that this is still an area that, even though it's maturing, becoming part of the mainstream, as I mentioned in that intro, there are still many misconceptions related to this field. Would you agree with that? And if yes, what are the most common misconceptions that you would like to now clear?
Yeah, true. I think there's a lot to unpack here. I mean, I would say the main thing is that digital assets are crypto, and crypto is speculation and fraud, and we can go a long way from here. I would say these are the main misconceptions, because these are not just one, and also that digital assets are just Bitcoin. Bitcoin is the only crypto we can say a lot about here, and there's a lot of fraud in the market, which is really not really true nowadays. I'm not sure there's more fraud in this digital asset space than anywhere else in the financial sector, or maybe in other payment rails. So I would say these are the main things to say about it.
Yeah, I completely agree with what you mentioned, because I think there has been a lot of talk in recent years about fraud and all of that stuff, which obviously no one says it's non-existent. But if you look at reports, so chain analysis that we regularly look at Dorsum, it has been gradually decreasing. And would you agree it kind of shows the strength of the potential real world value creation of these assets, that while we see this misconception, or still many people not necessarily understanding this topic, it has seemed to become more and more accepted by traditional finance?
Yes, things are happening into this direction. I think most of the traditional financial players are still playing it safe, but there are a bunch of first movers who started to work with these assets, and it's pretty good. And I'm sure we're gonna talk about it later, but it comes from the fact that there are regulations here in Europe and in other parts of the world. There are getting more and more regulations, and people are more and more aware of these assets. And since these assets are new and digital, younger generations usually are more capable of using digital devices, solutions, apps, whatever. And sometimes it came to more natural for them to use these assets, or to connect with these assets, like meme coins, for example, which might not be a good idea for investing, but besides that, or beyond that, younger generations, teens, can be easily connect into these phenomena.
Yeah, absolutely agree. I think we've even read some research by the CFA Institute that confirmed that Gen Z is very much driving the adoption of digital assets, but not only. So it's not just Gen Z.
Yeah,
The other generations are also gradually
exactly. Yeah.
opening up. You mentioned regulation there, and we will talk more about it in depth, a bit more depth, but just at a high level, where do you see the current market for digital assets today? Hungary, see whatever scope we are talking about, and what are the key developments compared to 3 or 4 years ago when it was a bit more of a wild west than today?
Yeah. So in Europe, since we're here, I think we should talk more about that. So in Europe, MiCA made a really big change in the sense of regulating crypto assets, and now it's fully in force from the July, basically, which means that we know what are crypto assets, we know who can do with what with these assets, because these are all regulated activities. Obviously, there's some rules which are changing right now or may change soon, as this is a very new regulation for these assets. But this really cleared the field, I think, for clear the rules for for the players who want to use these assets for certain services. And what we see now, there's a couple hundred maybe licenses which were offered to crypto asset services already, and there will be more to come, obviously.
Mm-hmm. Yeah, I think it's over 200 crypto asset service providers in the EU does seem to me like a strong sign of this not just being one regulation that was introduced by the EU and then limited activity happening, but it's actually something that has really increased the turbulence in the market in a good way.
Yeah, definitely. And it's just, so this is the EU. Obviously, even in Europe, Switzerland, the UK, they have their own regulations. We can think about overseas, the US. It's happening there already. So more and more regions are coming into age in this sense. Yeah.
When it comes to use cases, because we've been dancing around this topic of traditional banks starting to open up to digital assets or crypto asset services, I know that MiCA defines 10 use cases within this field, but where
services, right?
The 10 key crypto asset services. But of those, or maybe outside even, where do you see the current focus being, the key use cases that the market is now focusing on?
Yeah, I think generally, if we are talking about crypto, I mean, trading and custody are the biggest use cases. If you see any successful on-chain apps or centralized apps, centralized exchanges, these prove to be the most the best use cases, which had the most reasonable product market fit in general. And that's what we see here in these services defined as well. And that's what we see. I think that custody and trading related use cases are the most interesting. That's what I think. Yeah.
Mm-hmm. So yeah, that trading and custody does seem to be kind of like the perfect entry point for banks into crypto. Do you have a few examples of major banks across Europe? I mean, I know you do because we work together, among other things, on this topic as well. But could you share a few examples of big banks that are now introducing this or have done in the past already?
Yeah. So I think which is close to us. I think the closer to us is what Raiffeisen did in Austria. So they made a kind of a white labeled. So they partnered with a third party, and they made a white labeled service where they can offer crypto assets to their customers. And generally, if we are talking about what do banks do with these assets, that's generally the case, that they offer these assets or a couple of these assets, the major ones, to their customers to invest in them, like they do with stocks and bonds and all these kind of other equities. So that's the main use case. We see it in BBVA. We see it in other participants as well. And usually, what banks do is that they partner with exchanges, with custodians, and they have the client relationship, and they serve the clients with these trading venues and service providers, which I think is a very reasonable approach, because crypto custody is a very special kind of activity. And usually for a bank, to test the waters, to learn the technology, to learn the market, to learn the new licensing, all these kind of market related things, it's better to focus on these new learning parts, these new things, than building up their own solution, because it's always a much more risky choice.
So you could say that the dominant, or this is what I take from what you've just said, that the dominant approach is to partner with the specialized providers who have licenses and special experience in specific areas such as custody or crypto trading or other parts of that ecosystem, rather than building these capabilities in-house?
Yes, there could be reasons for doing that as well. But I think generally for a traditional bank who has a kind of a retail background or commercial background, that's the most reasonable and advisable step or architecture. Mm-hmm. Yeah.
Okay. So when it comes to the technology, that's the defining approach. But there may be some crypto asset services that only a traditional bank could logically offer, or traditional financial institutions. So for example, what do you see the timeline on wealth managers, private banks offering tailored advice, portfolio management, investment advice related to crypto assets to their high net worth clients or premium?
Yeah, I mean, what we are talking about, these are just the first steps, the main use cases as we talk, the first steps in these service offerings. So I think that's the next one. So obviously, if you have an offering, then you can build on such services on them, advising clients and so on and so on. Until then, it's quite hard to do that. So first, you have to understand and learn that. It doesn't really make sense to do it otherwise, I think.
Mm-hmm. When it comes to,
of course, it's different when you have when you want to offer these kind of crypto-backed ETPs or ETF products. That's a different kind of reason. We are talking in the kind of the real crypto asset owning kind of universe.
And when it comes to the crypto investment advice, for example, for a private bank or someone maybe might just be listening to us working at a wealth manager or doing wealth planning or investment advisory to high net worth clients, will those institutions gain these new capabilities primarily for their existing employees? So will a traditional investment advisor be expected to be able to offer advice related to crypto assets? Or do you think it's more likely that they will somehow hire new people who are specifically experts of this field? Or could it be either one of those and it just depends on a preference? How do you see that new knowledge or capability being added to their?
Most probably both will happen, and is happening, I think. I don't really think that those who are advising clients do not understand and know crypto assets already. I think they know and understand the assets already, or most of them does, because these are obviously smart people who understand complex things as well, and since these assets are here for a couple of years now, 15 something, then I think they know about them, and they know the basics about them. And that's a different question if they can do advice on it or not. So, but I think generally both will happen. So there will be those who's coming into the market as new ones, and there will be those who are already in the market advising clients, and they're going to learn it and they're going to do advice on it. Yeah.
We do know that banks often struggle when they have to integrate something new into their operations. It's not a given, so it's possible to do it well, but there may be some obstacles that they need to be mindful of when they start that process. Where do you see the key obstacles for a traditional big bank that is looking to just, as you mentioned, start with crypto trading and custody and then expand? Is it going to be culture related, maybe technology or operational things, new processes? Maybe a mix of it. How do you see that landscape today?
I think it's less about complexity of the technology. It's more about the operations and implementing the regulations into operation. I would frame it like that, and that's where we usually help our clients to understand what opportunities are in the regulations and how can they implement it into their kind of strategic thinking, into their operational thinking. And that's why it's kind of the hard ways to implementing these regulations or the opportunities in the regulations into operation. And this means a lot because in the end of the operation, obviously there's a code, but we're both in technology, so it's not about that. These are space rockets which we have to figure out how to fly. It's about integrating these technologies with standardized connectors usually. So so the technology job is less complex in these situations than the operational kind of things because new activities are coming in, and we have to figure out who does what, and to what extent.
Yeah, I mean, you mentioned the operational bit, which I do find crucial because, for example, and this sounds a bit banal, but the idea that you can trade these assets 24/7 and banks will offer it and you can trade anytime is kind of new in terms of their operations. I mean, we have gotten used to stocks being tradable mostly 40 hours a week, which is, not how most other aspects of our lives
Now 40
work.
plus.
Now 40 plus.
Yeah.
So how is that going to be a challenge for banks that now there is this trading service that is available constantly and it might not be actually as volatile as some people think? I read some statistics that actually showed that crypto is now not necessarily much more volatile than the S&P 500's biggest stocks, but it's still a volatile market. So you have to be prepared as a bank if you offer this service to really offer safe terms for customers.
Yeah, I mean, when I talk about operations, that's the main question. So what is it different from traditional assets? And this is one of the biggest, I think, the 24/7 operations. However, it's manageable because it's not about that. Bank systems are not running 24/7; they are running 24/7. It's just figuring out the SLAs. What happens if something goes wrong? Who will handle that? Who will wake up? Who's in the office and who's not? But still, these are all manageable areas, I think. But it doesn't mean it's not a problem to solve, and that's why it could be a cultural challenge in a sense. On another note, I think so. If you think about all these big exchanges work overnight. So generally, overnight trading should not be a big change from that kind of perspective. Obviously, the weekends are different. So there's definitely a change here, but I think it's manageable, to be honest. Yeah.
I see. Let's talk a little bit about digital asset consulting, because this is a big part of what we do in our in-house competence center at Dorsum, of which you are leading. What does digital asset consulting really mean? Because we understand now, with your help, digital assets. We obviously understand consulting, but how should we imagine such a service for someone who maybe hasn't heard of that before?
Yeah. So let's a little bit back up just to give a better context. So now we have talked about the crypto asset side, but there's also another side when we are talking about equities. which are tokenized. So, I mean, that's also another part of these kind of digital asset phenomena, because these are also running usually on DLT technologies. And there's a third part, which is about stablecoins, which relates to, although they relate to MiCA and crypto assets, but you can pay with them, so they can use this as a payment rail. So that's also a different one. But generally speaking, when we are talking about digital asset consulting, what we frame is that in these fields, in these three fields, but usually I would say the use cases which are relevant for our kind of financial clients, we can help them to figure out what's the opportunity, how can they move into that opportunity if it makes sense, and we can help them to figure out the operation and do the operation and the implementation. And that's where we try to be a strategic advisor to them, and holding their hands through this journey. If it's a vendor selection, it's a vendor selection. If it's a conceptual thinking, it's a conceptual thinking. If it's handling the business necessities or operational questions of the implementation, it's about that. But usually I would frame us as a strategic advisor to these matters, into these clients.
So it's really a kind of client journey that can start anywhere, if I get you correctly,
Yes.
because I think a lot of financial institutions are in a position of wanting to do something, realizing that the market is opening up, but not necessarily having a clear idea. And it's really just the idealization phase. Can this kind of journey start there, or does a bank need to have a very clear idea of here's what I want to do, and then you can? Obviously, Dorsum is just one of those firms, but we will obviously talk about ourselves here. Can that process start from right the beginning of just having an idea?
Yes, it can start from anywhere in this process which I just described. It doesn't really matter where are they. So usually, not everybody is at the stage one or the stage zero in a sense. Some institutions and some of our clients are more deep into this journey, and it's very natural in a way. So I mean, that's how it is.
Are there any specific points in this journey? So if we go from just having the idea, analyzing use cases, choosing what you want to do, designing the service, then you will obviously try and get a license, try and find the right partners, and then do the actual implementation and go live. So I've just covered the whole life cycle. What are the points, in your opinion, where it's easiest to get stuck? For that reason, banks should pay special attention to. Is there any point where it's like very common to see projects stall for a while?
It's a very interesting question. But I think, as with anything else, every client is different. Every client has its own journey. So, I mean, there are some milestones in this journey, which I just mentioned. I would say those milestones are kind of could be these bottlenecks, if we say so. It's conceptual bottlenecks, but generally, because every client is in a different traction. Every client has a different organization. Every client has a different mindset. It differs. Some knows what to, even what kind of cryptos to offer right away. Some will struggle on that. Some knows in what model they want to do the integration. Some will suffer on that. So I mean, there's a lot in here, which combination here, which we really don't know right away. But usually these are the points when they figure out what's the opportunity, when they figure out who to work with, when they figure out how to build up the operations. I would say these are the three main points in a way in this journey.
Yeah, so every client is different, which is definitely true, and they also differ in their activities. Bank, wealth manager, asset manager will want probably quite different things to do in this field. But do you see any kind of recurring questions that clients come to you with? Just like we've talked about, common misconceptions that are present in the market. I don't necessarily mean misconceptions here, but just things they may not be aware of or may specifically want to get some help on.
Yeah, so I think the misconceptions are better than these common questions, because usually the common questions come from the misconceptions regarding fraud, regarding risk, regarding what to offer. If they offer, for example, smaller cap cryptos, would it be better for the trading revenues, or would it be worse because of the risks they will be associated with, for example? Or if you think about in terms of tokenization, if you think about that, if we tokenize something, if we let people to buy it as a fractionalized share of something, does it create liquidity? No, it doesn't. If I tokenize something, does it changes the legal nature of the asset? No, it doesn't, because it's the technology only. The legal nature doesn't come from the technology in which it runs. So I would say these are the main questions, or most common questions, which we usually have to answer as a high level thing.
Yeah. Another question that I really want to ask you about, another topic, is education, or you can call it whatever, increasing the capabilities or building the knowledge of a firm, of a company. How common is it, or do you see an increasing trend in banks, wealth managers starting to kind of increase the knowledge of their own employees, maybe even getting outside help? How? Because these initiatives don't happen in isolation, so it's unlikely to succeed, in my opinion at least, a new crypto asset service if you just have a small team that is doing it, but the whole organization just exists in the same state as they did before. Do we see a positive change in that direction?
You mean that how important I see this, or
also that, but also, like, do we see more and more banks who are looking to do something in this area, realizing that this is not just going to be something with a single project team and everyone else in their teams will?
Oh yeah. So I think that's a common misunderstanding in some ways. So when to widen this kind of a team out enough to to handle such a transformation. Usually there's a small team, maybe a task force, which does it, which starts to understand it, and that's very normal, I think. But I mean, I heard about, without naming the bank, I heard about banks who offer these kind of services, and still out of 1,000 whatever people, only a couple, maybe 10 to 100 knows about these crypto assets as well, which I think might be enough for their distribution and trading needs, because if they do it centrally, there's a different sizing that you have to educate your people. But if you want to do it properly, I think it's better than if you do rolled out education in a way. So differs from bank, differs from the situation. There's no obviously the better would be that everybody knows and everybody has the education for that, but it's not reasonable, to be honest. What's reasonable is to start with a small team, maybe a hero. We like to call it. How do we like to call it?
Crypto champion.
Champion. Yeah, it's not the hero, the champion. Yeah.
Well, they can become a hero if they do it right.
They can become a hero. Yeah. So they start with the champion. Then the champion, gathers a team, and then with this team, it moves along. And then when it gets to the kind of the implementation or the kind of the wider activities phase, then people from all around the bank, from different departments, come together and form a bigger team, and that could go on. But it's more like a project setup at this point, I guess.
All right. And before we move on to our next topic, which will be regulation, as I promised, I will have to do a shameless plug here, and I'm sure our viewers will forgive me for it, but on this topic of, developing digital asset services in your own way, or, every bank needs a different approach. I do think we have just come up with a relatively new and quite useful, hopefully useful tool, which can be found on digitalassetintegration.dorsum.eu. It's a 5-minute kind of questionnaire where you can choose different tracks based on your role in an organization and get some useful insights and questions about your organization. But Peter, if you would be happy to just give us 1 minute of the key info on this tool. So if anyone's listening and feels like that would be nice to just try something that might give me some ideas in 5 minutes, how does that look like?
Yeah, it's just, you should visit the site because it's great. And Botond is a talking head there, and me also. So, no, just put the joke aside. So we did this tool to have this whole discussion, which we basically do here, closer and more self-service to our clients. And I think even though it's a very short survey, we try to pack it with real content. So I think it's useful to go through it. And, it's just a couple of questions where we try to give instant feedback about all of these questions, and differently to each kind of CXO role. If I would say, if you're a strategic leader, if you're a CFO, if you're a kind of marketing leader, you could find your kind of base in it and your pillar, which you can go through.
Yes, well, we'll definitely include the link in the description of this episode.
And we are very proud of it.
It's been very interesting to put it together. Hope that it helps some traditional firms, even just to think about some old questions in a new way, hopefully. But moving on to regulation, we have talked about MiCA so many times in the last 3 years, I think, since it has been accepted and entered into force in the EU. After 3 years, if we just take a moment in time, how do you see it so far? Do you think it has been a success overall? And what are the key impacts?
I think it got mixed reviews, definitely, which we can see. But personally, I think it helped a lot to clear out the European market. That's what I see. It also gave opportunities to European companies. But even though if we can see US companies made the effort to stay in Europe, so if you know about Coinbase, Circle, other kind of companies, they got their licenses. So I think it was in this sense it managed to stay these companies, which is interesting that Binance couldn't get its license. That's kind of interesting. But today's geopolitical situation, it's let's say it's an interesting point. But besides that, I think and what we told about 200 licenses were granted already. So and the numbers are going up. It's working. I think the interesting thing is that, which you could have expected before, that there are certain countries which have a lot of licenses and license applications, and especially Central and Eastern Europe has less. And I think that's an interesting topic. Why is that? And we can we should do an analysis on that, I think, because it would be interesting. But all in all, I think for the EU, this is a really good step into the right direction of handling these assets. And because what we can see now that other jurisdictions are coming as well, I really hope that we can make this interoperable to really leave crypto as a global technology platform.
And I don't know how optimistic you are about that, but actually,
I'm too optimistic.
That's what I was going to expect, actually, because it does feel like MiCA was one of the very few kind of big topics in technology that the EU was first on when it came to like creating a large framework for regulating it.
It was, yeah.
And do you see that impacting other regulations? So newer ones in the last 3 years, have they been kind of resembling the structure or some specific aspects of MiCA? Did they have that impact?
That's my personal opinion. Obviously, I'm not there to say for sure, but that's what I think. That what I read and hear and feel that other jurisdictions are reading it, at least, very thoroughly. Yeah.
And I mean, if you just look at the number of licenses, it does feel like MiCA kind of gave a green light to the big banks, because before MiCA, it sort of looked like they were not interested.
Yeah.
But now, would you agree that it turned out that they were interested, they just didn't feel safe to explore it, and now they feel like they have something to rely on?
That's a good observation. I think I would frame it like that. Yeah.
Mm-hmm. Well, we've been mostly talking about crypto digital assets so far, but I think a lot of people have been expecting us to cover a bit on tokenization, which I guess might even be a bigger trend these days, although it's not necessarily the right way to measure the weight of a topic, how much of a hype it is. But tokenization has really become a topic that has interested even the kinds of traditional institutions that may not still be very open to crypto. But tokenization, my impression at least, everyone is interested right now. Once again, I will put you on the spot and give you a very difficult job. Could you briefly define what tokenization is, really? Security tokenization, maybe.
To be honest, it's easier, I think, than with crypto, because as I briefly mentioned before, it's in a way, or in the kind of the vision of it, it's still the same security, a bond, a stock, or a fund unit, whatever. Or a treasury bond, whatever, that is now just on a different settlement layer, and this settlement layer is usually blockchain or any other DLT technology behind it. So that's what it is. If you have the blockchain, you have the stock, you tokenize the stock, you put it on the blockchain, and manage it on the blockchain and not on the traditional settlement layers. So that's what tokenization is, and specifically, that's what security tokenization is. We can tokenize other things as well, which is not our kind of scope here, but it's the same for that reason.
The same logic, I guess.
The logic is the same, and the process is basically the same. And what is really expected from this change, from this transformation, is that since a decentralized ledger is still global, is less fragmented, then it creates a more frictionless handling of these assets in ways of issuing them, settlement, and as a blockchain is by design, or any digital, this DLT technology is by design better prepared for a kind of a fractionalized share of the token. It handles that as well better, and that's the basic promise. However, I really don't think that today's players are doing it just for these sense, but they are looking for the business benefits behind it. And what we see now is that stocks, treasury yields, some forms of money with stable coins are being tokenized, and also standard securities. And I think I mentioned funds already. Yeah.
Yes.
So what we can see now is that more and more assets are being tokenized, and today I just checked the number. It's $34 billion worth of assets are tokenized. I think it was close to 16 at either it was in December or January, but roughly early this year, which is I think it's a pretty big leap. And there are some researchers who suggest it will go up to $1 trillion soon in a couple of years. I don't know that. However, what I can see that the pace is very promising of these assets.
I often experience in our work together that one thing that a lot of people are not entirely clear on is, how does digital assets and crypto relate to tokenization? And one of my favorite analogies that I won't pretend to have come up with, I've heard it during the Crypto Assets Conference in Frankfurt this year, is that crypto is like is essentially a new asset class, sort of like as if we invented a new kind of vehicle. And tokenization is like a new kind of rail that makes all the vehicles, the new one like crypto and all the old ones, potentially run faster, cheaper, more efficiently. Does this roughly cover what the reality is in your view?
Yes. I mean, I think it pretty covers. So it's tokenization. Generally, it's a concept. When we talk about security tokenization, then we are talking about security tokens. And when we are talking about crypto assets, then we are talking about crypto assets, which both sit on the same rails, which is tokenization, if we can say so, but we can call it in a lot of other names, but generally it is, because it uses the same kind of conceptual, logical technology, like and solutions like crypto assets does. Yeah.
One of the things about tokenization is that there has been this conversation about could this revolutionize capital markets, and it's not just people in this field talking about that. Larry Fink, who is the CEO of BlackRock, has said that the future of capital markets is tokenized. How do you see that impact unfolding over the next few years? Because I'm always a little worried when a new technology trend emerges and there is genuine promise and we already expect it to take over the world, when it's more of an early stage, I guess. But could it really have a huge impact on capital markets? People saying processes that are suddenly much cheaper, quicker, intermediaries that might be disappearing. I mean, I'm giving you the most sensationalist headlines right now, but what I'm looking for maybe is just for you to kind of help me. What could realistically happen of those things?
Yeah, it never like that, I think. It doesn't mean it won't change a lot of things. It's just different. So, I mean, as we see it with AI, it starts to turn out a little bit differently than we expected, I think, last year or the year before. So I think, but I'm not here to talk about AI. Just there's an analogy here as well. So what I think is happening is that this is a very interesting technology. It's a very new technology, but it will live next to the old one for a couple of years, maybe even for a couple decades, whatever. I don't see the future into that direction. However, what we can see that it's the user base is dynamically growing. The assets, at least in value, are dynamically growing, which is very promising. Although it's very small compared to the total market cap of stocks and bonds. What we can see now, what some market participants are expecting from these changes are parts of what we talked before, the 24-hour kind of 24/7 settlements, which could create or bring more liquidity into this market. But what generally is happening behind the scenes, that the liquidity which is on chain because of crypto can be touched with this kind of offering. And if you think about it, if there are big players who can grab a slice of this kind of market or liquidity, then they could have an edge on that kind of market. So I believe it's more about a market positioning game, what's happening now, than full-scale technological revolution which happens tomorrow. I think it will happen because as these new players are entering into the market with bigger and better offerings and more liquidity comes into the market, generally and naturally it will make it faster. So just the reasoning is different, because when you do such thing, you have to put a business case behind it, and the business case is usually not about just that part, but there should be a reason behind it. So that's how I see, and that's what I think will happen.
Yes, I really appreciate that more nuanced view, which I think we do need. You mentioned there that the competition today in introducing these tokenized instruments may also be for those funds that are already on-chain due to people holding stable coins or the most famous crypto assets like Bitcoin, Ethereum, or others. Do we see that competition happening? Are there any traditional financial institutions that are already targeting those investors with some kind of tokenized traditional instruments? Are there any examples that you could share?
I would frame it like what you asked before. Then how can crypto assets connected to tokenized assets and all these tokenized securities? So if you think about it, if these are in one rails, one settlement layers, which is a kind of a DLT, you can think about it that if I'm a big institution, maybe a service provider who works with clients, with crypto clients, I have a lot of stable coins, and stable coins are needed, to go in and out of these positions of crypto assets, maybe huge positions, whatever. But when I don't trade with them because the market is down, or for whatever reason, I don't think that these crypto investments are favorable for me, I can stay in stable coins, or maybe I can put them into something which generates yield for me, because stable coins are I'm not sure if the audience knows that, but they cannot pay yield. And if there's an asset which pays yield, like tokenized treasury, then I can put into this tokenized treasury bonds or fund, and then I can put my stablecoin into that and park it there until I can trade with them again. And if there are some, for example, money market funds which are getting more and more popular with BlackRock's Bill and Franklin Templeton's Benji, or with Amundi's euro-based money market fund, but there are a lot of others, then theoretically I can use these assets to generate yield on my positions until I wait for the right time to trade again. Or maybe I can use these tokenized assets as a collateral against my positions, whatever. It's more like the decision of the market participants. How can they use these tokenized assets?
So what's really interesting to me is this combination of...
But this was just an example. Yeah. There's a lot of combinations.
I mean, there are many more, yes, of course. I find it interesting that we talk about, some processes on-chain will really just be logically the same as they are currently in traditional markets, but there are changes. So obviously on-chain custody has the same key purpose, and there will be similarities between how it is handled today, digitally, but off-chain, of course. And that kind of change in how we do things, or processes, or the new capabilities, how we safeguard assets, this is what often brings up that question that I've already mentioned of, what's happening to the traditional intermediaries or simple players, primary dealers, custodians, CSDs, stock exchanges, issuers, regulators. And I purposefully want to get away from this who's disappearing kind of thing, because my experience working with you is that's not really how we think about it. But could you give me a couple of examples of the kind of actors that, in your view, really need to kind of up their game to make sure they can retain or potentially increase their position? And who could be like the winners? Who are the ones who could mostly gain? And who are the ones who need to kind of protect their position?
Yeah, so I think World Cup just ended yesterday, so maybe the day before. Yeah,
a couple of days.
Just recently. Yeah. So I mean, there were a couple of interesting matches in a way, that who was defending and who was attacking and who did what. So I would use as a basic analogy, but generally I think if you want to differentiate between these strategies, I wouldn't go into that direction, although you can. So how I would frame it is that what do you do that creates value for the customers you have? So if you think there's as a client that maybe you're a custodian, maybe you're an investment firm, maybe you're a fund a manager, and you think that you can create value with using this technology. For example, you will provide a fund unit for a specific customer type. Then you will have to understand the technology, what's behind it, and then you're gonna understand more and more opportunities around it. So I think that's the logical leap, to discover and figure out what opportunities can I grab based on my current capabilities, my current knowledge of the market, and my current branding. And if I can grab that kind of opportunity, I can create value on it, then I will use this momentum to create more value for my shareholders, for myself, whatever. And I think this is the right way to logic. I think since it is a very, very global market in a way, it's very hard to protect your kind of market share. That's my honest opinion. I think it's better to adapt or to be in the transformation and try to create value around it. And I think there's a lot of value to be made here. So I think banks won't disappear. I mean, these investment firms won't disappear. They just change their positioning on these rails. Or the traditional rails won't go away anyway, so they will keep their position on that rail, I think. So I would frame it like that. So that's how I think it will play out.
So what I take from that, to go back to football terms, is you can play attacking football like Spain, you can play defensive football like Argentina, and what matters is, do you score a goal at the end or not? And anyone can score a goal with any kind of football.
Yeah.
Okay, that's a nice takeaway for me as well. We are beginning to hit the end of our conversation, so just a few kind of general questions to end here. Let's imagine imaginary financial institutions who is sitting on the sidelines, interested in the topic, but not yet doing anything. What would be your kind of general advice? And I know every firm is different. Call us right away. This has just been a 50-minute conversation leading up to this call to action. Here's our phone number on the screen. No. What would be kind of just the first idea? And of course, everything that comes after that has to be tailored to that specific institution. What is your what are your key words of encouragement or advice for starting the journey?
I think how the journey starts for everybody is just to understand what's behind that. So understand what is it in general, in high level maybe, and to figure out the whys. So why are others doing it? If there's a kind of a good reasoning or a defendable business reasoning, which can relate to this imaginary institution, then the best way to start is to go into that direction, figure out who can be the champion of that story. I think that's the most interesting. Who will be the one who's going to lead that initiative inside the company, and who's going to kind of figure out where to go. And I think that's the right step. And after that, everything will come.
Mm-hmm. All right. And looking ahead for, say, 3 to 5 years, what do you see the digital asset market or the tokenized market looking like? What are the key trends that you are now paying attention to when it comes to, kind of seeing how the market develops in those, say, 3 to 5 years?
So I think tokenization will go more and more. What I'm really not able to forecast. Anyway, I'm not able to forecast, but which I see as a big cloud around it, that how AI will affect this kind of market moves. I mean, we see a lot of use cases for AI in this field as well. Generally in the investment field and other places as well. So I mean, it's a kind of an interesting topic how it can affect and how not. So if we don't play around that, I would say tokenization will go up as the moment will come right away. I think crypto will stay. More and more players will come to the market. I believe more and more traditional banks would come with these offerings. I expect that there will be a couple in this region as well, Western Europe as well, and overseas as well. It will happen definitely. What I'm really curious about, what will happen to stablecoins, how integrated will they be into our payments? I think that's a really interesting kind of topic to think about. I know a couple people who sold their kind of FIFA World Cup tickets and got USDC against it. So it's that kind of integrated in the official site. So I mean, I think that's the power of these stable coins right now, and I think it will be more into everything later on. Yeah.
Last question. I've been trying a few times during our conversation to kind of take you to more sensationalist directions, but you've been very adept at avoiding those with much more nuanced answers than the questions have been.
I'm too calm after the holidays.
I know. You've just returned from a holiday and you still have that chill vibes. It's much more difficult for us to maintain throughout the year, but I'm not going to give up, and I will be a little controversial now and ask you to name one trend, use case, topic, whatever in this field. It can cover crypto, tokenization, or any aspect. One trend that is overrated and one that you think is a bit underrated, just compared to how the market sees them today.
One that is overrated.
I was going to guess you will mention CBDCs, but you might not say they are overrated.
Not anymore. Not anymore. No. Because the tricky thing with CBDCs is that with the digital euro, we can see that Europe is so Europe wants to go with it, and I don't see it as a going fad. I think something will happen with them. I don't really know what, but I think they will be here in 5 years as well. So I'm not so sure. I think meme coins are a bit of a too much behind that. So that's what I would love to forget, to be honest.
Yes. It's also like one of those things, right? When you have, just to go back to the football, and you have that one player on your team that doesn't play very nicely.
Yeah.
And then your whole team gets this branding of like they play ugly football, and it's just like one player who may be hurting the image a little bit.
Yeah. And I think which is underrated and has been already, put into the trash, I would say, are NFTs. So I'm not sure they are that bad as a technology or as a use case. So I would expect that it will come back in a different form, because as it was in this first form, it was not really useful, and it was close to meme coins. So I think it will come back with more interesting use cases later on. It's a tip, but That's what I would say. So yeah.
All right, I will
maybe
take
even with financial use cases. There were interesting use cases before that in that sense as well. And what I think it's underrated as well, to name a kind of a financial one, as I think DeFi is underrated seriously today. I think there's a huge potential in it. And I know that some people might say that no, it's not underrated. It's over there. But if you think about it, in the kind of the financial sphere, it is. I think it's underrated.
Yeah, it does feel like DeFi may not have that kind of upswing.
Yeah.
Because it's harder for traditional institutions to adopt it. But if you look at it just from like scientifically, or how it makes financial services kind of work alongside a new logic, and even separate them into like different building blocks that are very nicely composable, it has huge potential.
But it on chain and in the kind of the Web3 world, it's a big thing. But in the financial kind of traditional financial space, it's not. It's just there's DeFi as well. Yeah, there's that.
All right. Well, we'll keep an eye on NFTs and DeFi and many other topics that we've discussed. Peter, thank you very much for accepting our invitation and providing us with so many insights on this very interesting topic.
I hope I did. Thank you very much.
I'm pretty sure you did. Thank you for joining us. And I would also like to thank all of our viewers for joining us today. I hope you found today's episode interesting or insightful. And once again, feel free to visit digitalassetintegration.dorsum.eu for our 5-minute tool on this very topic for your own institution. Thank you again. I hope you keep an eye on future upcoming episodes. If you would like to be among the first ones to learn about them, do subscribe to Dorsum's YouTube channel and please follow us on LinkedIn. Thank you for your attention and see you next time.